Hey traders, happy Tuesday. Welcome to Charts and Coffee for September 7, I guess it is. So I hope you all had a great long weekend and are ready for this short trading week. Some interesting action right off the bat here. We're going to have a weaker open on the TLT, which is a market that I have been watching for a potential buy. Let me show you where we're going to open today and what that means for. So we're going to open at 147.08, which is right in this area right here. And you can see it's pretty much syncing up with the 55 exponential. It is below the previous Darvis. So do keep that in mind. It is below that low that we saw on, what date was that? The 26th of August. Not what I want to see, but still within the buy zone. Now, let me mention something about triggers here, because those of you that have been following me on this, and I did a free video on this, am I changing my directional bias because of a gap down? No, we've already been really updating our directional bias from bullish, straight up bullish, which is what we saw through, say, mid-June, back in mid-June to about mid-September. That was all just straight up bullish. And then now we're a little bit more neutral, as you can see on the JT multi, as that has gone yellow. And it's a little bit more choppy, but the chop has still been a precursor to moves higher. Now, is that still going to be the case? Not necessarily. We always want to think about not what could go right, but what could go wrong. How do we control risk, right? That's always going to be first and foremost. So when I look at the risk part of it, since we are gap opening through all the different triggers. So I have an aggressive trigger, I have a moderate trigger, I have a conservative trigger. So when I'm opening through all the different triggers, as we are going to today, get this hair out of the ponytail there. There we go. Haircut on the way. I think that's the big goal this week, by the way. It's good to have goals. So what is our risk when we gap down through all the different levels of the entry zone? We wait. So when I have a gap through the triggers, tomorrow I'll look for an inside day. Tomorrow I might look for a minor low. I'm still bullish. I just want to give the market a moment to sort of simmer down, and then we'll re-engage. So if you've been following in the Sector Secrets room, if you've been following from the update that I did on bonds for the free video last week, that is the plan this morning. All right, so great to see you all. Let's tackle our first question of the morning. Signed up for my live trading and workspace bundle. Hey there, Sanjeev. Thank you very much. Based in Australia. That's going to be a late night for you, but so glad you can join us. Based in Australia, wondering how long the live trading sessions will be. Oh, okay. So we're going to start at 9:20 this Friday. It'll be the same schedule on Monday. So 9:20 New York time, East Coast. So 9:20 New York time. And then, I think we're slated to go to 11:30. But, knowing me, I'll probably run a little bit past that depending on the questions. Don't be surprised if we end sometime between 11:30 and noon, but I will try to be very respectful of everyone's time. But just presume that it might go to maybe close to noon, but I will not go past noon, East Coast, New York time. Okay. So that is the plan. Follow-up question. I noticed that on your trading view, you don't have the double green boxes. Yeah. So I just look, if we have JT multi, which many of you know, sitting up in here, right? You'll notice there's usually two little boxes up in here. What I have here is whatever's on the very right edge of the JT multi-trend, which is what's down in here. This is the multi-trend. Whatever's on the very hard right edge, the current color of that one, is the same thing as whatever's in the JT multi. Okay. So yeah, it becomes a little redundant. I want to spare as much real estate as possible. So it's just redundant. And then on toss, we have the ability to put the trade flags down with the JT multi. So again, kind of sparing space up in the important price part of our chart. All right. So yes, the sessions are scheduled for about 2 hours a day. Don't be surprised if we go over maybe 15, 20 minutes, but that's going to be the schedule. Thank you so much for the question. And yes, they are always recorded. If I'm on the mic, charts and coffee, chat room, classes, live trading, unless there's some sort of technical difficulty, if we're on the mic, someone somewhere is making sure it's being recorded. So yes, and then it will be available for replay in, I don't know, whatever section those indicators and that live trading is available within the Simpler Trading website. All right, moving on to, let's see here. Hey there, Dan. How are you? Good to see you. I finished, oh gosh, you finished a trail awesome on, wow, that was my birthday. How cool, Dan. So 2,650 miles, 420. Wow, wow, wow. 163 days. I'll be back in the chat room late September. All is great. I cannot wait to see some photos and hear some of the stories. Yeah, looking very much forward to seeing you. I'm so glad. So anyways, gang, Pacific Coast Trail. This was something one of our members, Dan, wanted to do his whole life. He's one of our traders, and he decided just to do it. And he chased his dream and finished it on the 1st of September. That is awesome, Dan. Looking forward to hearing about all the adventures. I'm sure there were many. All right. And thanks for the updates throughout your journey, because we were thinking about you often. All right. So moving on. Oh, that's so cool. That's so cool. How do I pick a first target? Charlie, it's going to sound really general, but this is so important. First targets should not be, if it's a buy or a short, it should really not be any higher than for a buy or any lower than for a short than recent action has shown we've seen support or resistance. In other words, for example, if I'm trying to think of a long position we have open, XLP. It's a long position we have open, right? We bought in here. My target, our first target for this trade in the sector secrets, is not up in here. A lot of traders will put their first target, their T1, up at or beyond a new high. I think that is a huge tactical mistake. I don't care what projections are hanging up there. They're valid, but for possibly a T2, right? So T1 should really respect where we've faltered before, where the obstacle is, where the resistance has shown itself before. Darvis will help with that. Just the high up there will help with that. So that's oftentimes one of the biggest mistakes I see traders make. They're expecting their first target to be up in the stratosphere. By the way, let me follow this up with T2, because this is important. If your T1 is more on the prudent side, which it should be, your T2 should be full on greedy mode. You want your T2 to be quite ambitious. That stratospheric target should be reserved for T2, maybe even T3. Okay. So as far as gaps today, yeah, we are seeing some interesting action in terms of some potential. Look, usually the week after non-farm payroll is pretty sedate in terms of data, but this market now knows the Federal Reserve has the PCE, GDP, and now NFP, as the entire collection of alphabet soup out there. And they now can start to really hone the messaging towards the taper that is still likely to be a November conversation. So the market knows now taper is coming. I don't believe the market's going to panic in terms of a more aggressive taper. I don't see that, but we need a reason. We need some sort of catalyst for movement higher. And notice we're just sort of levitating. We're just sort of hovering. Now, you think about different markets that are going to be sensitive to interest rates. Clearly tech is going to be the most sensitive when it comes to that. This is not a news flash. I know most of you know this, but it's always a good reminder that tech is always going to be something that will be more sensitive to rates. So, I think ultimately, rather than doing anything other, look, I don't want to short this market. Do I think there's going to be a pullback buy? I would love nothing better. I would love nothing more than a pullback back into the wave, just as we saw before Jackson Hole. 21 exponential is not valid right now. There's no propulsion dot. So I would love to see a pullback into the wave. I would absolutely love that. But I'm not going to look to engage the trade as a pullback. Let someone else take advantage of that. Let someone else, pick a top or whatever. But I would say that we're probably, just based on the stall, we're probably looking pretty good for a pullback retracement. So I'd love to take advantage of that. And if we get those gap downs, if we get those sell-offs, I am game. I would love to see that. My favorite option strategies. I'll tell you this, Andres. My favorite option strategies are probably alarmingly simple. Long calls, long puts. And I'll go so far as to say this. The timing required to get a long call, long put is the same timing typically that a savvy stock trader would be buying the underlying. The level from which you will buy a derivative of a stock, the option, or the derivative of an ETF, again, the option, should not be that different than where you'd actually want to buy the thing itself, the ETF, the stock, whatever. Additionally, the idea that the only way you can make money trading options is to write premium is probably the most repeated and biggest lie ever told. You can get your what handed to you by irresponsible options writing just as much as you can irresponsible long call, long put speculating, directional debits. So this idea out there that you're not a professional options trader if you're not writing premium is such hogwash. You can be responsible on either side of the transaction. Any one of us can. So the idea is, are we getting the timing right and are we managing risk right? So my favorite strategies are long call, long put. Distant second, I will leg into verticals. And then distant behind that, I'll look at collecting premium by way of, put credit spreads, things like that. But if anyone out there can't get the timing for just a directional debit down, all the fancy multi-leg footwork in the world is not going to save you, not going to save us from just a poorly placed trade at the end of the day. And I think options traders fall prey to some really simple biases that say, well, if I can collect a credit on a trade, it's far better. No, you can lose just as much. So for me, with frequency, you can just still be a losing trader. So for me, I like long calls and long puts. And I'll even say one other thing. I don't even trade a margin account. I do all that in a cash account. You know how nice it is to know that what I have at risk is finite. I sleep very well at night, even when things are gapping. That's for me, long call, long put, directional debits and cash account trading, no pattern day trading issues, no margin, no over leveraging. It protects me from me. So I hope that helps. Microsoft, sure. And by the way, there's nothing wrong with those strategies. I do use them from time to time, but most traders start out with these multi-leg strategies. Start with the building blocks, right? I was never taught what early on. I'm self-taught as an options trader. I was never taught early on what a straddle, a strip, or a strap, or a butterfly. I wasn't taught those officially. Later on, I started reading what they were. But what I realized early on is long call, long put, short call, short put. There's only 4 things you can do: debit or credit, put or call. 4 things. And then when you put those pieces in different combinations, you've got some sort of multi-leg strategy. But if you can't time when to collect credit or when to buy that directional debit, all the multi-leg stuff is just going to convolute the fact that it's built on a really shaky foundation. So hope that helps. And it's not in any way to say multi-legs are bad, but a lot of traders are shocked that they still can't produce the results they want, even though they're doing some of these more sophisticated strategies. I hardly ever use them, to be quite frank. Microsoft. All right. So love the structure. of not only the boat, the stock, I like the ETF as well, XLK. And then, you want to jump out to QQQ. If you want a more concentrated bet on Microsoft with the omission of Facebook, Google, Amazon, Tesla, then you look at XLK. And that means also you should like Apple, which I do. So I do like Microsoft. I need a pullback. 21 exponential is valid for a Microsoft pullback. Nikolai, 21 would be valid for a pullback. I'll forego the 13 though. So hope that helps. ZM, sure. Big gap on earnings. This reminds me of what Amazon did a little bit. And a lot of it actually, because it gapped down, took this big hole in the chart. This one's gone double red. Now, Amazon did not do this. See this right here? No, that's just a big cup of nope for me. Now, I do get there's this low in here, and we start thinking, well, yeah, I mean, look, if there is a place that we're probably going to bounce from, this would probably be as good as a place. But some of the basic guidelines are I'm below the 200. See that right there? We're on the bearish hemisphere. That gap wasn't just any old gap. By the way, we were breaking the equator, if you will, before the gap down. That's a big warning right there. And then we went double red on the structure of the market at the very end of August. So I'm really not allowed to put this on the watch list. And that not allowed is a really important thing. It frees me up to not force something or find something on ZM that I probably shouldn't venture into. It's a lot like looking up at the clouds and telling yourself you're going to find a bunny rabbit. Our brains will somehow match the pattern. It's remember The Beautiful Mind, that movie? It's actually a really good one, Russell Crowe. He was just finding patterns and everything because he was looking for patterns. I think the easiest way to protect ourselves from that is just to say that there's certain criteria that is no longer valid and that the probabilities are low. But I do get why it's very tempting to look for a potential long. But I won't do anything with it. So ZM is just a big no for me. All right. What is the name of the volume indicator below the chart? Oh, this right here is called the V-score. This one right here. And then I've got my volume label right there. All right. So there you go. Yeah, just under the chart. So that's the volume label. That's the V-score. And both of those, by the way, are available in the bundle that we're doing the live trading for. That was the question earlier here in Charts and Coffee. We've got the bundle live trading starting Friday. You can check that out at simplertrading.com/Raghee, RAGHEE -workspace, right? -bundle. Raghee -workspace -bundle. So you can check that out. But yeah, those are all included for Toss, Thinkorswim, and TradingView in that bundle. All right. You get the indicators and the live trading, which is what's so awesome. All right. So moving on. Next question. Dan, thank you. Thank you. I appreciate it. Thanks for the birthday wishes. CLF. All right. Jumping on over to CLF. I do like Cleveland Cliffs. And where I'm also interested is the SLX. So again, we always want to work, I don't want to call it backwards, but we want to work from small to big, at least at some point. If we're starting off with an individual stock, we need to know where it's existing out there in the passive investing universe. And while I would definitely say it's a buy or nothing, we've got to be more patient because of the sideways market environment that we're in since August 19, August 20. We've spent very little time in an uptrend, although that is the directional bias that I'll focus on, bullish. But let's be careful. We're probably going to see a lot of chop before we do head higher, which is fine with me. You just have to calibrate for that. And this is where I would treat this more as front running a momentum breakout type scenario, where you look at the lower part of the zone and then you build your position down in there because you're closer to the point of validity for the trade, lower cost. And if you're wrong, quite quickly. All right, really important. And I had some free videos back at the Simpler Trading YouTube channel, specifically on the topic of choppy market order placement. Check out the IYT videos. Also, check out that TLT again. If you didn't catch it before, I'm going to wait for an inside or minor low. If I gap through, so when I send out an alert, I let you all know sometimes days, if not, certainly hours, if not days in advance, that I want to be buying at a certain level. I want to buy a certain call with a certain strike and a certain expiry at a certain level. Those are the triggers, right? But if we gap through those triggers, all of them, we hit the pause button. We're not reversing. We're not necessarily even canceling the alerts. Let the alerts go off. That's why I love alerts and not conditional orders. Let those alerts go off, and then we'll reconsider tomorrow if you want to jump back into that TLT or not. All right. So with that being said, I'm going to go jump into the options room and the futures room. We're dual broadcasting for the first hour. If you've got questions, bring them. I'll see you in those rooms in just a moment. As always, thanks for joining us for Charts and Coffee. Thanks for being part of our Caffeinate and Dominate crew. And I'll see you tomorrow. Same time, same station. Be good to each other, gang.